Okay, let's focus now on shares in TMX Group. Not so long ago, that stock was hitting record highs. As of August of last year, it was north of $57. It has come down a bit, trading right now at about $46. The company posted fourth quarter results that beat expectations. Let's get more from John McKenzie, CEO of TMX Group. John, thanks very much indeed for joining us. So just looking at your results in the latest quarter, what do you think jumped out? What was the most important thing?
Well, Andy, thank you for having me this morning. We're very excited about the quarter results and the year in general, because the overriding story here is the business delivered in every part of the franchise. So, the capital raising business really started to come back last year. Trading activity was up double digits across the board, and our global insights, data and information business was hitting new records. So this was not only a record quarter for TMX, it was a record year, both in top line growth and double-digit EPS performance. So across the board, we're thrilled with what we've been able to deliver. It allowed us to do a 9% increase in our dividend as well, relaunch our stock buyback. So I think it's something that the stakeholders around TMX can be very happy with.
Now, TD has a buy on your stock, but says there are AI concerns. And your biggest source of revenue in the latest period was global insights, aka market data. It does look as though investors are worried that that could be cannibalized by AI.
Yeah, and I think, though, unfortunately, that the investors have got a misunderstanding of the nature of our business. And so let me clarify for you. You're absolutely right. About 41% of our business last year was in global insights, which is all of our information businesses. But unlike some other the software-type companies that have been caught up in these challenges this week, our business is very much a proprietary business. And so our data and information is about proprietary data like TMX Data Links that has market data you can only get from us. Our Trayport business is our energy market, which aggregates on a proprietary network. Our Verify business is about benchmarks and indices, which again are proprietary to us and embedded in products that investors use. So these are actually very difficult to disrupt with AI technologies. And the organization like us is obviously looking at AI technologies in terms of how do we actually get more competitive and more efficient in terms of how we bring these products to market. So on the Trayport piece I mentioned, we are already embedding AI capabilities in there to be more productive in how we bring the product to market. That's allowed us to do more with the same resources year over year. So I do really think that this is a misunderstanding of the nature of our business. We're not a software sales business. We're a proprietary information business.
And then your second biggest source of revenue, well, capital formation equity was big at $82 million. Tell us, and then derivatives, of course, was the next biggest, $115 million. Tell us what derivatives you're big in these days, John.
Yeah, the derivatives business for us has been fantastic in 2025 and will continue to be strong in 26. It's very much a mixture of things that are retail-oriented, like ETF options. ETF options have had phenomenal growth, up 80% year over year. But we're also very strong in fixed income futures, which investors all around the world use to get exposure to Canadian dollar or to hedge those positions. And over the last number of years, we've been adding a lot more product to that. So things like 2-year bond futures, short-term, long-term, to ensure that whatever exposure an investor is looking for, they can get it on the Montreal Exchange. And that's allowed us to grow double-digit year over year. And the results we've had into Q4 this year has been, again, a record quarter in terms of use of those products by the industry. So it's a real kudos to the team here that have really engaged with the industry, understand what the product needs are, and put products on market that are going to help them with their investment experience and their objectives. So you're going to continue to see that strength in 2026.
Just maybe we can put up a 5-year chart for your stock, because it did hit record highs there last summer and then drifted down. And we've talked about the most recent sell-off, which is not unusual. I mean, not unique to you. London Stock Exchange shares fell this week. But why have the shares, would you say, broadly speaking, come down from August?
Yeah, and I never want to be really engaging in what happens on a short-term basis. We're always in this for the long term. I'm a big believer that we should be moving to semi-annual reporting as well, so that we have investors focus more on long term. But if you actually look at the results of the peer group, like all these exchanges and data companies that we're talking about today, over the last 3 years, TMX continues to be one of the strongest performers globally. And that's from not just a share price standpoint, but from a business results standpoint. Revenue growth, margins, EPS expansion. So we're not taking anything from this near-term downturn. We're focused on our long-term strategy. I believe it's going to play out in the long term, and the investors are going to come back to TMX as well.
Thanks very much, John. John McKenzie, CEO of TMX Group.